we've got a very exciting panel here. We've got Alan Lane, the former CEO of Silvergate. We've got Chris Lane, the former CTO, and we've got Eric Yakes. Let's just quickly run down the line and do a brief introduction before we start.
Yeah, I got involved in the Bitcoin space coming out of the private equity world and got obsessed with Bitcoin, quit my job, wrote one of the early economics books in the industry, and then started a venture fund over a year ago. We're obsessed with Bitcoin adoption, and that's how I met Chris and subsequently Alan.
So, been adjacent to the Bitcoin space since 2013 when Silvergate started banking digital asset companies. Say I became a bit more of a Bitcoiner in the 23, 24 timeframe, but I still work closely with traditional banks, working on digital asset strategies and stablecoin tokenized deposit in particular.
Yeah, I was the CEO of Silvergate Bank from 2008 to our wind down in 2023. I've been in banking for most of my 40-year career. Most recently, I've been focused 100% on Bitcoin. I've been an advisor to Unchained Capital in Austin, Texas.
All right, Alan, I want to start with you. As the most seasoned banker up here, Silvergate were the first bank that was doing anything interesting with Bitcoin. And since then, a whole lot has happened. But are the banks actually coming to Bitcoin? Because everything I see seems to be banks coming to stablecoins.
Yeah, I think that's actually right, unfortunately. So I believe that there's a unique opportunity for banks to step in, especially now in the United States with the new administration, to step in a larger way and focus on Bitcoin and specifically lending against Bitcoin. Unfortunately, that is not yet happening. Everybody seems to be distracted by the stablecoin idea, the shiny object of stablecoins, but candidly, there's not a lot being done there either right now.
Okay, so maybe we should talk a little bit about why, over the long term, stablecoins aren't going to be enough, and these banks will have to adopt Bitcoin in some degree. So it'd be interesting getting a few perspectives on this, but Eric, you kick us off.
Yeah, to Alan's point, stablecoin adoption's been massive, right? Like it's something that's been captivating the world over the past few years and all the financial services industry. And the question is if you're trying to advance your business in some sort of way, then you have to move against the grain. You have to be thinking more long term. And the question is, what is that option in a world where all these institutions are starting to move towards stablecoins? And I think core to that idea is that there's a fundamental mispricing of risk that's happening in Bitcoin lending. And the bank that becomes one of the primary first movers as we start to see the sector shift over, where today there's really only non-bank financial providers. And the reality of banking is that once you have a bank charter, you have access to the cheapest cost of capital in the world. So today when we have Bitcoin loans at 12% interest rates and banks step in with much cheaper capital, that's going to lower interest rates over time for the industry. And that's going to create a new competitive dynamic. And there's an opportunity for a bank where when you care about your net interest margin as one of your most important financial metrics to potentially double or even triple that aspect of their business by focusing purely on Bitcoin lending. Like that's kind of the view.
So is lending the silver bullet here, or is the more that the banks have the opportunity to do, Chris?
Sorry, what was the question?
Is lending, like both Alan and Eric have both talked about Bitcoin lending here. What else will the banks go into when it comes to using Bitcoin?
Yeah, so this actually gets back to your first question, Danny. Bitcoin ultimately Bitcoin is the future of banking. Stablecoins are the present, but what stablecoins are doing is actually getting the plumbing of digital signature-based assets into the financial system. Ultimately, once that plumbing is there, it becomes much easier for banks, to integrate with Bitcoin.
Well, what is it with stablecoins? It's like like in terms of like the near term, like how do you kind of see that adoption happening? It's like they're putting people on the right rails, right? Like when Chris is saying like digital signature based assets, that's what's happening, right? Like when you're sending a Bitcoin transaction, when you're sending any sort of digital asset, you're just signing with a digital signature. And like putting all of our software systems into something that's using digital signatures is a huge leap forward to like expanding the market. But like I guess like how do you kind of view stablecoin? How do you view like that digital signature based adoption over the next few years, and what are like the biggest markets around that?
Yeah, I mean, once banks have the ability to interact with tokenized assets, once they have natively in their stack the ability to to self-custody or to custody digital assets, it's ultimately going to enable linked settlement. So we're going to see it initially in things like FX, the ability to actually effectively have better delivery versus payment mechanisms or payment versus payment mechanisms. Yeah, I mean that's I think what we're going to see initially.
Right. It's like custody, brokerage, lending FX. Those are kind of like the near-term things.
Exactly.
Yeah.
That makes sense. And so, Alan, obviously Silvergate were the first people really in this space. Since then, we've had like the Genius Act pass, and there's kind of there's an opening of the door for stablecoins to come into the banking sector. Who do you think is primed to sort of make the most of this opportunity? Is it going to be the smaller banks, the smaller regional banks, or will it be the like too large to fail banks?
Yeah, I don't think it's going to be the smaller banks. I think the larger banks are going to step in a big way, and we've started to see that. And I step back and I ask myself, well, what problem are they really solving? And notwithstanding what Eric and Chris were talking about in terms of like allowing banks to start to get comfortable with interacting with digital assets, the fact of the matter is I think they're kind of building on the wrong platform or the wrong protocol. And I'm agnostic as to which one of the other blockchains you're talking about. I think everything ultimately should be built on top of Bitcoin because it is the only decentralized protocol that has been operating uninterrupted since before Silvergate got into this space in 2013. So everything is going to ultimately be built on Bitcoin. A lot of folks try to be nice and say, oh, well, we can try it on this other protocol, and then whatever works we'll bring over to Bitcoin. Why not just start with Bitcoin? It is, again, the most decentralized, secure protocol, and I think everything else is a little bit of a distraction.
Yeah, I totally agree with that. One of the things that came out of the Genius Act that I was a little bit surprised about was the fact that they wouldn't let Tether offer yield to US-based customers. And David Sachs came out and specifically said that was because of pressure from the smaller banks. And both stablecoins and Bitcoin offer a threat to the traditional banking system. And so I may be kind of naive here, but will the banks let this happen? Maybe Eric, you can start.
Yeah, like, and for context, how I met Alan and Chris is, given their experience, our venture capital firm, Epoch, everybody was saying when SAB 121 was repealed at the beginning of this year that the banks are coming to Bitcoin, and we're like, well, what does that actually mean? So we wanted to talk with like experts in the industry and really like deep dive into what that question was. And then, when the Genius Act was passed back in the fall, like really the two primary things that did for stablecoins and how it impacted the market was it forced non-bank providers to own short duration government assets as reserves in these products, and it didn't allow them to pay interest. And that's really just a form of regulatory ring fencing so that banks can issue a similar product that is paying interest. And that's called a tokenized deposit, which Chris has written quite a bit about. And I'll pass it to you, Chris, to kind of talk a little bit about that distinction.
Yeah, I think the interesting thing about a tokenized deposit versus a stable coin is at a technical level, these things can not only be similar, they could literally be the exact same smart contract. So at a technical level, you can think of stablecoins and tokenized deposits as identical. So what is different about them? Ultimately, it's the asset that underlies, that actually, I guess the underlying asset. So in the case of a stable coin, you have high quality liquid assets, things like short duration treasuries. In the case of a tokenized deposit, you just have the bank's balance sheet.
Yeah.
But again, technically very similar. And the most interesting thing for me personally is in order for a bank to do either of those, they actually need to get into their technology stack. And they need to have the ability to either to custody digital assets and to link settlement between their legacy core banking system, their internal subledger, and this external network. So once they do that for either stablecoin or tokenized deposit, the plumbing is there and it's primed for Bitcoin.
And that was like one of the really interesting things to us as a venture firm is we wanted to ask the question of what needs to be built for banks to be able to participate in this economy most effectively. And I think what a lot of founders, entrepreneurs, or executives in the industry are a bit misguided on is we're looking at technology that's been built in isolation for so long. It's been built on its own rails for its own purposes. And if you want to be integrating with the massive amount of capital that exists within the banking system, then you have to talk its language. You have to be able to speak to the systems, very old systems, like a payments hub, like a core ledger, and nobody wants to do an IT restructuring so that they can support Bitcoin. What they want is to use all the systems they're currently using and have those support Bitcoin. And that's one of the problems that we've focused in on, and we're like, we want founders to be building technologies that are supporting this type of adoption by integrating with the incumbent system. And not to monopolize this question, but I think one of the other really interesting things is when we were digging into this question, Chris had been working on actually a lot of research kind of as to how banks, how they're going to think about Bitcoin. And it's actually a really novel perspective that he brought up with us.
You want me to launch into that now? Or?
Yeah.
So Eric mentioned a paper that he and I wrote together. I think fundamentally, when people approach Bitcoin, especially in the financial services space, they think of it as something other. If you think of, we operate in a two-tier banking system. So you have central banks at the top, you have the commercial banking layer, which is tier 2, and then you break the rule because the third layer is the end user or the fintech. Most people, when they approach Bitcoin or think about Bitcoin, they think of it as like this other thing. It's this thing that like sits there at the fintech layer, that bottom layer, and that is not at all what Bitcoin is. Bitcoin is at the top layer. Bitcoin ultimately is a decentralized central bank. So what that means from a bank integration or a bank adoption perspective is the same way, as a US bank, we very likely, especially a smaller US bank, we don't actually go out and get a charter. A lot of banks don't go and open branches in foreign jurisdictions. They work with a foreign correspondent to get access to that rail. And that is ultimately the way I think Bitcoin is going to be spread throughout the financial system, is this correspondent banking model.
And that was like the coolest thing to me about this was every other central bank that banks plug into that they ultimately are getting the reserves necessary to be issuing loans from, they have to get access to that. You have to get a master account at the Fed. You have to get another account at another central bank. And these are closed systems. So when banks think about, well, what's a good open system? Bitcoin is the only credibly neutral open system that they could be plugging into, and it has this fixed supply rate. So like that's kind of like one of the primary theses we were talking about is it's going to be a natural convergence upon Bitcoin. When you're a bank and you have to say, well, I want to route, I want to wire funds from the US to China, then I have to hop through this correspondent banking model because my bank doesn't speak to every other central bank. And all of them are eventually going to start naturally converging on, well, why don't we just all plug into Bitcoin? Because this is the only neutral and open one, and I don't need to get permission to plug into it. And that's going to be one of the natural evolutions.
I think you're a little bit more optimistic about the time frame in which that's going to happen.
It's part of my job.
I think ultimately you have to see fiat continue down the path that it's on. I think it's inevitable. I think it will happen. But right now, I think stablecoins are going to, it's the technology layer. It's going to blow the door open for digital signature-based assets into the financial system. Ultimately, it is Bitcoin that's going to benefit. It's the whole world that's going to benefit because you are going to have a actual a hard money-based asset that underlies that. You can link settlement, using this, this hard money-based asset with a tokenized fiat.
But I do think that raises a really interesting point around like the neutrality of Bitcoin, because if we're talking about why Bitcoin is going to be the future of banking, not stablecoins, one of the big things in my mind with the issue with stablecoins is that, like, we talked quite specifically about US banks so far, but this is a global thing. And with the kind of move to this multipolar world, the BRICS currencies, like, are these other countries going to want to adopt a US dollar stablecoin that helps prop up the treasury market, or are they going to just move to something like Bitcoin? I don't know. Maybe Alan, you can start on that.
Yeah, I think that's the end state. It just, as Chris was saying, it depends on how long it takes for us to get there. But I think you're exactly right with that question, Danny, because right now, there is this tension between, okay, are there going to be central bank digital currencies? Is the dollar going to, still be the reserve currency of the world? It looks like that's probably not, that's probably waning at this point. And Bitcoin is the only neutral currency and tying back to some of the things that Chris and Eric were talking about, when you think about these, these systems that are built in layers, and you think about, okay, well, what problem are we really solving? You can literally go from your fiat currency directly to Bitcoin. You can transfer it anywhere in the world. And then what you have at the other end, it's what the correspondent banking system has done in the fiat world, is try to put all of this together. But what you need to do is solve for that last mile problem, which is how do you get it back from Bitcoin into whatever currency is being used. And again, this is a temporary problem because eventually it will just be Bitcoin. But for the foreseeable future, we've got to help build these rails.
Right. Like that's one of the key distinctions, I think, that today it doesn't matter as much, but over the long term, because it's a system based on a fiat currency, it's going to continuously matter more and more. Where a stable coin isn't final settlement of an asset. A stable coin is claim on the liquidity of an institution that owns short duration government assets and other things today. And that distinction is going to become more and more important as it relates to regulatory sanctions as they emerge. When we think about the geopolitical environment and multipolarity of fracturing of the global environment today, that's going to start mattering more and more. How are countries going to respond to the US dollar increasing in its adoption and are expanding in its share over time when they would like their domestic currencies to actually be providing those functions? So it's at that point when it's not necessarily that people will want Bitcoin, it's that people will be forced to drop into Bitcoin because it's going to be the optimal choice in a prisoner's dilemma amongst institutions and countries that are all saying, well, I don't want to use this other country's currency, and ideally we want to use ours, but we would just simply prefer to opt into these more neutral systems.
One of the interesting sort of dilemmas here is there'll be a portion of Bitcoiners being like, why do we care about the banks? Like, Bitcoin allows you to be your own bank. But does this put constraints on the banking system that aren't in place now? And does it actually create a healthier environment for banks?
Long term, I think it does. But again, and we touched on it a bit earlier in terms of, do the banks really want this? Okay. The answer is no. However, I do think that it is inevitable that eventually, money will converge to one. It's converged to one in our lifetimes to the dollar. As that goes away, we ask ourselves the question: well, what's going to replace that? Ultimately, I think it's Bitcoin. But then, how do all these banks, these other financial institutions, whether they're in the U.S. or other countries, how do they make that transition? How do they go from where they are now to a future state? And I'm just going to put a plug in here right now. One of the really kind of least risky ways to just jump in and get your feet wet, anybody that's a banker out there, start, and maybe there are none, but start figuring out how to lend against Bitcoin, because Bitcoiners right now still live in the fiat world. They still need their fiat currency. And so one of the best ways to kind of dip your toe in the water is figure out a way to lend against Bitcoin. At Silvergate, we had a very successful program that we stood up over a couple of years, and even during the 2022 liquidations of exchanges, et cetera, we never took a loss because it was over collateralized. And we've talked a lot about the decentralization, but Bitcoin is a digital bearer asset. It's the only truly bearer asset that a bank can lend against. You can take possession or control of those keys, and when you have control, then you have that collateral. If your borrower doesn't pay you, you liquidate the collateral.
The interesting there was the idea that money converges to one, which is clearly true. And like you say, it's been the US dollar in our lifetimes, at least in the US. But there's still however many fiat currencies out there. Before the world converges on Bitcoin, do you think all the other countries are going to converge on the US dollar through stablecoins?
Well, I think that would be the view of the US. But I'm not sure, actually, yeah.
So maybe, I mean, we're running low on time. Maybe to kind of close out, we can look at what you think the future of Bitcoin banking will be, both sort of short term and then longer term. And Eric, you kick us off.
Yeah, like to the points that Chris and Alan were making earlier, near term, the name of the game is lending. You're a bank, you earn net interest, and Bitcoin is this completely mispriced risk. You can drastically increase your net interest margin by becoming hyper-focused on Bitcoin lending. And having all the right technology and everything associated with that, having the custody, getting the brokerage functions, all of that's kind of like the near term. And then over the long term, I think that there's the correspondent banking model that we were talking about, and how that's going to start expand for cross-border payments and being this like neutral central bank that banks are plugging into. And then I think that will eventually expand into Bitcoin becoming a part of reserves. And like that was kind of one of the key ideas that I pulled out of our research into all this, is one way or another, Bitcoin is like gravity. It's something that, because it is valuable, it will attract demand from people over time. And it's going to infect the reserves markets of everything. We look at Tether today. They have over 5% of their reserves in Bitcoin and another 7% that's in gold. Like, commodity-based assets are going to give them a competitive advantage when we see tokenized deposits or we see offshore stablecoins paying out interest. And what is going to be the ideal form of reserve backing that's going to give you the best competitive advantage at being able to supply that if you're over reserved on one of these assets? So I think over the long term, we're going to see it start stemming into those assets as a reserve asset more and more. It's already a major part of the largest. And I think as the correspondent banking model sets in over the much longer term, the reserves of a bank might start to look very different.
Yeah. Not to completely disagree with you. I
Please
think timelines is what's important here. In my opinion, the end state is commercial banks getting back to just the business of banking, which is lending. The end state, banks will not be in the payments business. The reason they're in the payments business today is because money is essentially a ledger, whether it's fiat money or digital asset, Bitcoin, cryptocurrency. Money fundamentally needs to be a ledger in order for payments to work, and the only ones that can provide the ledger over the last several hundred years are trusted parties and banks. But ultimately, we have a better solution for that now, and banks will get back to the business of lending only.
And are there any remaining regulatory challenges with this, or is it open water for anyone who wants to attack this?
Well, the one I was going to mention when Eric was talking about, Tether's reserves, 5% being in Bitcoin as an example, and ultimately banks having a portion of their reserves in Bitcoin. Currently, Bitcoin is not a permissible asset for a bank to hold. And so that's one of the biggest things. I mean, you can pass Genius Act, you can pass, now right now, the OCC just issued some new guidance within the last week or two that said that a bank can hold a digital asset for the purposes of using it in settlement. So if a bank is like working on a stablecoin project and they're using one of these other blockchains, that they didn't specifically mention Bitcoin, but theoretically, if I was building a stablecoin project on Bitcoin and I needed to have some amount of Bitcoin, even if it's just to pay the fees, those blockchain fees, as it's moving along, then I as a bank would have to hold Bitcoin on my balance sheet. And that's something that so far has not been permissible from a regulatory perspective.
Okay, so if you have a bank out there, it's time to add Bitcoin. This has been awesome. We're out of time. Let's have a big round of applause for the panelists.